Welcome to IMTC EMEA 2021. My name is Grace, and today I will have the pleasure of being your host. We're very excited to have you here, and we hope you enjoy this agenda that we have prepared for you. At the end of the session, you will have the space for making some questions using the Q&A button at the bottom of your screen. This session is being broadcast live on our YouTube channel. So today's sessions the panel will explore the potential evolution and hurdles to ensure digital remittances, including cross-sales and crypto. We have moderator Hugo Cuevas Moore, President and CEO of the Platinum Network and an expert on cross-border payments and remittances, and Erick Schneider, expert on cross-border payments and remittances, explores the transformation that digital remittances, the largest growth segment, have brought. Welcome, everyone. I leave the room to you, Hugo.
How are you? How everyone who's listening to us, it's great to be here. We are broadcasting both for our US audience and Latin American audience, or all the Americas continent, and also to our European, UK, Africa, and Middle East audience, which in the two different time zones. In this event, we are able to merge at least half of our agenda for both audiences. So thank you very much for being here. I'm just going to say hello and introduce Erick for you. I'm not going to be moderating because Erick can do all the presentation by himself. I'll come on at the end for some questions and answers if you have some. I know some of you are going to watch it live right now, and some of you will watch the recorded session afterwards in your own time, and this is fine with us. We will take a couple of hours to edit the session and put it in video, so we welcome all of you. Remember, any feedback, use also our social media channels. So Erick, is up to you.
That's wonderful, Hugo, and thank you so much for that warm welcome. Excited to be here about this and talking about IMTC EMEA 2021, and then what the digital currently looks like versus what it may look like in the future. I don't pretend to have all the answers. There's no crystal ball on this part, but this is a very interesting area that's been evolving that I'd like to share with you guys. In the discussions of this part, I do want to make it interactive. Therefore, Grace, as our host there, if you see any questions coming up there, if someone types them up in the meantime, I'm happy to address them either now, immediately, or towards the end. Hugo, if anything comes to mind there that you would like to add, interject, expand upon, I welcome that part. Before I get into my presentation, just a brief description of who I am. I was born in the United States, however, lived abroad in across the Americas, Latin America specifically for numerous years, Europe for a few years. And so I really do have a firsthand experience of the cross-border side, not only as a consultant, but also as a user on this side. I've done my undergraduate in Boston in the United States, did my graduate school at Wharton, also in the US, have worked in banking, such as Citibank, Bear Stearns as an investment banker there, and then most recently going into the remittance business. I've worked in both the digital companies, traditional companies, and so I have a agnostic perspective that I like to bring to the team and share over here. Without further ado, I would like to bring up the presentation now. I'll share my screen. So here we are, digital remittances. This is the key topic that we're here to discuss. Current highlights, which I think are interesting because there's been a lot of evolution in the business in the last few months, but also on the future there. What does the future hold for this part? What I'd like to discuss in the presentation is a little bit about what it looks like for the future, what it stands for now, what are some models that currently exist on the digital remittance side there, because I think it's a very different model that we have for a traditional company that's considering digital versus a digital only company. Some market statistics I think are going to be key as far as growth, what the penetration is, what do some evolution metrics look like. Valuation, What does the market think of the growth potential? What are the valuations of companies that started a few years ago, for example, versus some stalwarts like Western Union that have been around for over a century? What are some potential challenges that digital companies currently face in the market? And then what does the future hold there? What are some considerations that have to be thought of that are potential opportunities, potential disruptions, potential challenges? I have left some time at the end for Q&A, but again, please step in, jump through any questions that you have. I'm happy to address anything or expand upon anything that you see here in the presentation. So to start, I think the biggest question that we've been asking, and you speak to a digital company and I ask them, how do you see this? And they go, we are a complete disruptor and we're going in and we're totally changing this. I think this is up for debate because when I speak with the traditional companies, they see it as more of an evolution. I leave it to you to make your own conclusions on whether it's a disruption or an evolution. But time seems to be telling a story about this. So as mentioned, over a century ago, we have Western Union who started up. And while they were using coaches back in those days, they started to do a cross-border payment, a piece of paper that went through in the old-fashioned way, the rails and all. MoneyGram stepped in the 40s. Then we saw an insurgence in the recent 90s there in the last decade, RIA, Intermex, Via Americas, for example, stepping in with the more traditional method that we've seen today of working with an agent to do the cross-border payments, to collecting the funds and all. Well, Zoom was a visionary, and in 2001, with all the dot-com bubble going on there, they tried to shift this to a digital-only method. They didn't have an app back then. It was purely a website. Zoom has eventually been purchased by PayPal and continued. Pontoil is a hybrid there, which is an interesting one. It started off in 2007, in which it did the traditional brick and mortar side, working with agents across the United States to be able to send exclusively to Brazil. Once they launched their app, however, they started to shift their focus into a lot more on the digital side, becoming more of a global player as opposed to a single corridor, which is US to Brazil. More on USend later, because they've been recently acquired there by Inter. World Remit started in the UK in 2010 there, and interesting little side story, because I know the inside words there. World Remit actually started off as Africa Remit, because they were going to send exclusively from the UK into Africa. But they saw the global potential for the digital side and started to expand quickly, which means that they needed a World Remit name. They've recently changed their name to ZEPS there, which I don't know exactly what that stands for. It still leaves to be determined. Remitly was close on their heels, though, with a very similar value proposition based out of the United States. Their strategy was simple. They said, we're going to focus on the key corridors from the US, Mexico, the Philippines, India. We're going for growth, and then we're going to accelerate globally from there. And that's what they've done. Although that said, Remitly and World Remit are neck and neck in valuations, number of transactions, revenue, for example, and there's some exciting stuff coming up on the IPOs on both of those. Pangea is an interesting one, which also started on the United States, and it started as its own service. Now that said, it said, you know what? We see Remitly, we see World Remit, we see Zoom. They're doing a lot of the digital transactions directly dealing with the consumer. How can we be relevant on the digital side and do? I think what's interesting is Pangea became a lot more of a white label provider, saying, leverage the licenses that Pangea has, leverage the rails that Pangea has built in order for smaller companies to focus on offering services to their existing customers or to grow their customer base without building the entire infrastructure. Azimo came out in Europe a little bit later on. They had a very strong presence from UK to Poland, but they've been expanding globally on this side. All to say, bottom line, if you take a look at what has been done, is they've taken the traditional brick and mortar side that Western Union started 130 years ago. They're 150, good Lord, I'm old there, but 150 years ago, and they brought them online. But they're not the only ones that have done that, right? Western Union has westernunion.com. They have an app, so does MoneyGram and all the ones above. So in this next slide over here, I'm going to be discussing a little bit about what does it look like from a model standpoint for a traditional company like Western Union, RIA, Via Americas, for example. Of course, the most important part of this business is the agent model, which they have, whether it's proprietary, like Western Union has a lot of Western Union stores across the world, or whether it's a third-party agent that they use to be able to go through. It's the vast majority of their business. Their revenue comes from this part. However, they do see the growing trend of digital. They want to participate. The question is, how do they participate? So I'll walk quickly through this slide there because it's a very similar model as far as traditional and digital there for these. If an agent is collecting the funds from the sender, it gets into the traditional MSB. In this case, let's say it's Via Americas. So it goes to Via Americas home office, the KYC, the compliance checks are done. They send it either through an aggregator, depending on where the market is, or directly to a relationship that they have in that country. A bank, retail store, mobile wallet, whatever the case is, and eventually it gets to the recipient on this side. Very similar model on the digital side, but once you add this digital component on the bottom, whether it's through the computer, right, as a .com piece, or through an iPad or a cell phone, something like this, there through an app, whatever the case is, the question is, how is this done? And it's not necessarily easy because I'll talk about the structure of a traditional company. You take a look at an org chart of a traditional company like Via Americas versus a digital company like Remitly, and you're going to see some similarities. The compliance team is quite robust. The network team to ensure the growth on that part. The operations team to run things through. But there are some significant differences. If you take a look at the vast majority of people where the revenue is generated from a traditional company like Via Americas, you're going to see that it's the sales team. The sales team is the one that operates the agents. They're out there, they're signing up agents, they're making sure that agents have the proper pricing on both FX and on fee. They're promoting themselves a little bit, possibly by some in-store paraphernalia, some sales components to that, but that's the vast majority and the key driver there. What's interesting is you take a look at these companies and you have digital transactions from 1%, like an Intermex or a Via Americas, for example, going through the entire gamut, RIA in the middle, MoneyGram in the middle, and Western Union, which has really tried to push the digital side there. It now accounts for 36% of their total transaction volume is digital. So obviously, they do have an interest in growing on the digital side. The question is where? They want to complement their existing business, but they don't want to destroy what they have built with the agent model. So this is something incremental. They want it to be accretive on this side. And there are a few things that they can do. Of course, they can have a proprietary model. They could do something different with an app, for example. They can work together with an agent by saying, all right, agent, if you recommend the Via Americas app, for example, we will give you a finder's fee to go through, or we will give you a trailer of the share of revenue for X period of time in order to have something complementary that does not destroy everything that they've built around the agent model. Another one which has gained traction there, which I think is very interesting, is the level of white label that they can offer. Now, the white label model just means the company has built something and they can offer it to a subsequent company without saying, hey, this is the Via Americas or something to this effect. I think an excellent example of this part is what RIA has done. RIA has built a network of 200 countries that would pay out. It has licenses across the United States, each of them to go through. And what they've offered for some digital companies is they said, hey, why don't you use our network to pay out transactions? And this is beneficial. So Remitly did this a few years ago. This is beneficial for a company like Remitly or another company that's just starting up. Instead of going to multiple aggregators or multiple banks across numerous countries and signing up agreements one by one, and unfavorable agreements, right? Because they don't have necessarily volume yet. You go to one source to be able to do this. And this, to me, could be one of the cornerstones of traditional companies saying, yes, we have a digital strategy. It doesn't mean they're shifting all of their existing customers to the digital side from the agents. It could mean that they're offering the rails to third parties like this. Now, here's the digital model. The digital model, very similar on the digital MSP side. It does the same compliance checks. It has the network team. It can either go through an aggregator or directly to a bank, retail store, wallet to reach the recipient. However, it's a pure play in collecting the customer. And that's the key difference, I think, between the digital and the traditional ones is the ownership of the customer. So from a digital standpoint, you take a look at the org chart, and the org chart is slightly different on this. They've got the legal operations compliance piece, of course. However, the key one that is the driver is the marketing team. And the reason the marketing team is so important is the marketing team is directly responsible for acquiring that customer. And they do this in a few different ways. First way is search engine optimization, right? You pay Google for searches saying, send money from home to Kenya. And of course, Remitly wants to pop on that one. Zoom wants to show up on that one. And so they're paying and finding the right balance of what keywords in order to purchase. But it's also, how do you proactively reach these customers? And so working with Facebook is very important for them. As we know, Mark Zuckerberg's a billionaire, and the reason he's a billionaire is it's not free to use that platform, right? And so there's a payment that has to be done, but it's able to segment. And this is one of the benefits of digital, in which a company like Remitly can say, okay, we want to look for US customers based in these zip codes in California that are sending to San Luis Potosi in Mexico, and they have this type of profile and they have this type of Mexican background. So it can be a very granular sub-segmentation of the market. It's not just saying someone who's international based in a large send country like France, Germany, Australia. And that's where a lot of the funds are generated. Problem with a lot of the funds being generated is that's expensive. We're talking about Remitly and Zoom, well, not Zoom. Zoom does much more actually because they've got strong, but let's say Remitly and World Remit. They're investing millions of dollars a month alone in marketing in order to secure them. Traditional companies are investing tens of thousands of dollars a month on this because the agent is the one that's responsible for bringing in the customers. I think that's the big difference on this, which has ripple effects, of course, on the org chart and all. What are some key things that the digital company has to be reliant on? The first one is customer journey. They don't have an agent to walk them through, right? So it's everything through an interface. And that interface has to ensure that it is up 100% of the time. There's no downtime on this. There's no problem with the app or the servers to be processing. They also have to make it a friendly journey, right? It's sign up over here, put your data, and it's sensitive because digital companies are requesting very sensitive information, like take a picture of your driver's license or of your passport, input the data of your bank account or your credit card information, sensitive stuff. So it has to ensure that the customer journey is very clean along the side to facilitate the transactions. The last piece to mention is the year-over-year transaction growth. Yes, and I've spoken with digital companies and they all tout the fact that they're growing double digits, triple digits during the pandemic. They saw 40% growth, for example. That's wonderful. But when I turn around and I speak to the traditional companies, they say digital is good and well for volume, but it's not great for profitability because they're not profitable. Okay, there's validity to both sides of the claim there. So try to demystify the discussions on this part. When they talk about profitability, it's not on a per transaction basis. So a digital company is profitable on a per transaction basis, right? They charge a little bit less. Let's take a Remitly of $4.99, for example, which they make on the fee. They also make money on the foreign exchange, very similar to the business model that a traditional company has. The difference is the traditional company has to share this the revenue with the agent, cutting into their preference, and digital companies don't. What's expensive for a digital company is what we were talking about at the beginning of this slide, which is the marketing component. You're talking about marketing, that search engine optimization, money to Mark Zuckerberg doesn't come cheap. And in fact, a lot of the customer acquisition cost is estimated around $50 per customer, meaning that if you're making $5 per transaction, that customer has to transact 10 times to break even. And that's the key part about profitability that I think is a challenge. The other challenge that I'll mention here for digital companies is, how do you differentiate yourself? Let's say a World Remit from Remitly from Western Union's app, for example. What's the difference on that? Do you go by service? Do you go by challenges? Because in all honesty, all those companies offer payouts to just about every single country in the world and just about every single bank, retail store, or mobile wallet that's available. It's very different to go on that. The only difference in a lot of cases is, what's the better FX that's being offered? What's the lower fee to go through? A digital company has the model, and again, from the marketing side, to take a look at how to modify that for the future, like a loyalty program, for example. But we'll talk about that in a later segment. For now, I'd like to share a little bit of some market statistics. Now, More World Consulting has a strong database of this information where I pulled a lot of this. There's some desk research, there's some insights in speaking with some of my colleagues on the digital side and some of my the colleagues on the traditional side as well. But some key metrics over here to talk about. When we see transaction growth, we've seen year-over-year growth of about 10 to 15% from traditional companies like Intermex, MoneyGram, RIA, for example, which is actually quite good if you're thinking about it on the agnostic side. However, like I mentioned before, transaction growth for digital, especially accelerated by the pandemic, has gone from a low of 22% there, and that's a company that's very specific and niche, to a high of 60% on this year over year. Significant growth on the transaction side, on revenues. The pandemic, of course, has greatly accelerated this piece, but it shows that there is a little bit of a difference on this. And I'll talk about the size right now. Of course, e-commerce has grown significantly, right? Not only for the money transfer, but our friends Jeff Bezos, who made another few $1 billion, was able to pay for his trip to space thanks to the e-commerce component, right? Like, we're seeing growth on the e-commerce side. And if you ask somebody back in 2019 what the evolution looked like, it was significantly different to what we've seen in 2020 and 2021 there. That said, it has had an impact to the firms like Remitly. Zeps is the name that I use for World Remit. Still not used to it there. But when we see it, I remember speaking to World Remit back in 2017, and they were saying, we're getting close to doing 1 million transactions a month, and that's our goal, and we can't wait to do this. Fast forward to where we are in 2021, we're doing about 5 million transactions a month to go through. Same thing for Remitly. And it's not just caused to one corridor. It's not because Mexico is growing, although Mexico is growing at 25% year over year. Guatemala is large. It's the Philippines, it's Africa, it's all across the board. And it's not just from the United States, it's from Europe, it's from Australia, which is a large one, Singapore on these sides. So we've seen significant transaction growth, especially from Remitly and Zeps. Now, another piece that we've seen is new customers, right? So it's not just existing customers that are sending funds back. The pandemic has accelerated the fact of a wider reach. Mexicans that are second generation living in the United States that know of their family in Mexico but had not sent a remittance before have gotten into the market. And what's interesting is, since it's a second generation, they are banked. They have a debit card. They have a bank account. They're usually younger. They're more comfortable using technology in order to transfer. And as such, we've seen not only a shift to digital, but also new customers starting off on the digital platform to send their first remittance transaction, which is interesting. The non-bank segment, still excluded. There's no way that the digital can help the non-bank because they need some type of debit card or bank account in order to send funds. There's also not a little bit of lack of trust, right, in these parts. And so when we say digital, it's, to me, again, you ask whether it's a disruption or an evolution, it depends by segment, right? You have the non-banked and the labor diaspora that has recently moved to the United States from Guatemala, for example, and other Central American markets. They're not yet comfortable doing that and find much more solace in going into an agent or seeing a brand name like Western Union that they recognize, buying some things from back home on this part. So there's a non-bank segment, which I think is very important, that's always going to be served by the traditional segment. Now, some market penetration figures. Of course, we're going to see the top send markets as the top senders for digital, right? United States taken off, United Kingdom significantly, France, Germany, Australia. Those are the large send markets, and they're large send markets for digital. Now, on the high side that we've seen for the digital transactions, India, China, Mexico, Philippines, those are all ones that are the top 10 large ones. Colombia is an interesting one. And it depends on the demographics. And I'll talk a little bit about this side over here. So Colombia, you have a lot of Colombians that are white collar workers that have moved to the United States, to Spain, for example. Both of those countries strongly promote the use of mobile phones, which encourages apps. Colombians send a vast majority of funds back to their loved ones on a monthly basis, but they also have a model where it's a Colombian can retire back home and they purchase a plot of land or they purchase a property that's about to be constructed. And a larger and larger component of remittances to Colombia is comprised of individuals who are sending a mortgage payment back. And they want to send $1,000 at a time. The digital is the way to go. Mexico, with hard data, it's around 20% of the $54 billion market there. So over $10 billion is being sent digitally. And that's been growing very quickly. As we know, the United States comprises of 98 or 99% of this corridor. And that sophistication in the United States, the Mexicans, especially the second-born generation, the ones through the pandemic who have established ties to their loved ones that are in need. So if you take a look at how economies are evolving, the Mexican economy has not fully recuperated like the United States has. If you take a look at the charts, GDP growth was growing, and then all of a sudden the pandemic hit, it started to sink quarter over quarter. The United States has turned that around in a U shape and is now above pre-pandemic levels. Mexico is not there yet. While it's starting to recuperate, there's still a lot of unemployment going on, small businesses are going through, and Mexico and other emerging markets do not have the infrastructure of giving funds to these individuals, as in unemployment or small loans there for small to medium-sized enterprises. So that's a challenge. Medium-sized, Nigeria, Jamaica, Bangladesh. Nigeria and Jamaica are very interesting because on those two, there's such a dichotomy. Jamaica, for example, they have a strong nurse network along the east coast of the United States, along Canada. They're much more comfortable for that. However, they also have laborers that come over from Jamaica that are not as trusting of the digital side and to go through. This is a wide dichotomy. On the low side, Guatemala growing 30% year over year, hit 11 billion, is going to hit 13 billion this year. Significantly large figures that they see. However, they're not digital. They're not trusting it yet. These are the questions that digital companies have to be asking themselves of how can they penetrate a new market? These are also questions that a traditional company can say, how can we ensure that we continue to give support to our Guatemalans, our Vietnamese, our Egyptians there through our agent model to retain these customers? All right, valuations. Here's the key one, right? What does Wall Street think, and how's everybody becoming a millionaire through all these exciting stories about companies going public or raising funds through Series A, through Series E and F, for example? What's interesting is you take a look at this chart and it highlights the fact that Wall Street values these digital companies over the traditional ones. A few reasons for that are they think that there's more growth potential for the future. They like the fact that the customer is owned by the digital company, meaning that you can do cross-selling to that customer and expand the value proposition, maybe through a bank, maybe through lending facilities. They're going to improve the profitability. And the digital first platforms are much easier to integrate partnerships, APIs, to offer services to third parties, for example. So this market cap to revenue piece that we see over here, the way to read this is, let's take dLocal on the left-hand side, which does the cross-border payments, really focusing on e-commerce there. They made $350 million in revenue, or expect to. On that side, they have to be, if they want to be purchased, they're valued 71 times that 350 million. Crazy amount of numbers, right? It's over $20 billion worth because of the future potential and expectations that they have. On the complete other side of the spectrum, we've got MoneyGram. MoneyGram is a larger company. They're generating $1.4 billion in revenue. That said, if someone wants to go in and buy MoneyGram, they could buy it for about $1.4 billion on that. That means that there's a lot of uncertainty around MoneyGram, whether it has a potential for the future, whether they have the ability to compete, or whether they're going to be around in 3 years, in all honesty. And then you've got the ones in between there. TransferWise, of course, digital company. PayPal with the Venmo for the domestic side and Zoom for the international side has built a very strong niche. A surprising one that we see on here is Visa. So Visa, credit card company, right? What's it doing on here? It has gone through and made purchases of cross-border payment companies, ones that are facilitating, leveraging the fact that it has a very strong network of global banks already, and it's ready to disintermediate the entire SWIFT network there. And that's an interesting one, and it's valued accordingly, because not only is it 21 times corporate value, that corporate value of $24 billion in revenue makes it significantly large. We're talking $500 million or $500 billion to purchase this company. Remitly and Zeps stand in the middle, neck and neck. They're very close, and these are directional numbers that I have here, 450 million, 400 million for the two companies and what they are, but there's a trading value that's coming up. Now, in the interest of time, I'm going to continue on here. Let me know if there are any questions that have come through. Okay, what are some challenges that we see in this market? I've used this reference before. I like it a lot. Companies are like sharks, right? They constantly have to keep moving and eating in order to survive. There are some challenges that they have. One is, what about that previous slide? What if Wall Street says, you know what, that's not sexy anymore. We don't care about potential or your tech platform. We care about profitability per transaction and the lifetime of the customers. That's going to be an issue, and that may suffer. You've got other incumbents like Facebook. Now, they've changed their name numerous times, whether it's Novi, Diem, Libra, all these types of things. But our friend Mark Zuckerberg is a millionaire and a billionaire, and he expects to grow this continually. He's invested significant amount of time and resources into growing a business that may facilitate P2P transactions through a wallet that they build, or even leveraging an existing platform of WhatsApp. WhatsApp has 2.2 billion users on this, is by far the most used social media platform to go through. So that's a potential challenge that they've got in the short piece. The next one is crypto. The crypto can be a friend or it can be a challenge. And we've seen it that the crypto exchanges, you've got Binance, you've got crypto.com, you've got Coinbase, all of these have gone through numerous challenges to establish themselves in the United States, because it's a lot easier to do it in Asia, but they're transacting with crypto coins that do not have foreign exchange, that do not have fees. And so all of a sudden, if crypto takes on, then you can send funds cross-border to a colleague, 0 transaction fees, 0 foreign exchange, and in split seconds of a time there. So these are all serious disruptors to go through. Here are the big piece. This is the meat of the presentation on this side. And again, I welcome questions on this part. What's going to happen and how can we justify the valuations that we saw on this 12 times at a corporate value? So the top line growth and the bottom line growth, I think, is the easiest way to separate it. Top line growth means we're talking about growth in revenue, for example. How's something accretive to that side? Bottom line growth means you're improving the profit margin. Profitability is being improved. Consolidation. On the top line growth side, well, we've seen some acquisitions already in the market. The World Remit went out, purchased Sendwave, and $500 million to bring in another competitor in Africa to consolidate their strengths. This is why they have the holding company Zeps in order to combine the two pieces. This is going to be something accretive. You know, you're going to have to grow. You're going to have to justify all the funds that you're raising. So you've got public companies, dLocal, for example, which launched its IPO earlier this year. That's a capital raise. How do they invest those funds? World Remit, they did another capital raise. They received a few $100 million, which is how they got the $5 billion valuation to go through. And that's how they're going to be able to invest that piece. The next one is evolution. Well, how do you take the customer relationship and expand it and saying, hey, I know that you send remittances, but what if you have a digital bank with us? What if we issue you a debit card? Or do you want to do a small time payday loan? You can do something all within the ecosystem. YouSend Remitly has started to do that. They're offering digital wallets in the United States to be able to address the customer needs as opposed to address a specific transaction service, which is the remittance. There's expansion as well, and there's a lot to be done on this part. How do you bring in the new customers? How do you bring in different send countries? What if you start sending from the countries that are traditional receive? How do you get Vanuatu on the list here of receive countries to go through? The big one on this part is the SME segment. How do you go from the consumer side over to the small business side, which are doing transactions to their payments or paying through the gig economy, for example? This is a large one because if we talk about size of the remittance market, we're talking $700 billion. That's more than I have in my bank account, but it pales in comparison to the $4 trillion that exists for the SME segments to go through, and how do these companies break through? On the bottom line growth, well, what are you going to do? How are you going to be able to improve that piece? Partnerships is a key component. You've got payout alternatives, and I'll give you the example. DLocal went into Colombia and it said, you know what, you're paying 80 basis points per transaction on the FX. You're paying $2 per transaction. We're going to charge you pennies on both and disrupt the system. That worked great until the larger bankers said, that's too big. They went to the regulators and they had that opportunity shut down. But if it happened once, it's going to happen again. There are other opportunities in other markets to go through. I push outsourcing significantly on this part. Focus on what the company is good at. If you've got a company that's doing great and all of a sudden they're getting into 7 different markets, they're not that familiar on the compliance side, outsource it. Human resources. We're growing. We've got to hire 20 new people, but we don't have the human resources to do it. Outsource the human resource part. Leverage that fintech piece in order to help your fintech. And the last one is white label. Get into these different areas, go through, bring in additional revenue sources, but also leverage what you've built across the board and find some synergies with other partnerships, saying maybe you want to do digital wallets and the digital wallet wants to get into payments, find some synergies between those two. Crypto, again, friend or foe on this part. We've seen that there's an existing crypto market in remittances. So for example, US to Cuba, which is going through, it's still very small. But it exists. And if it exists there, it can go to El Salvador, which has recently said that Bitcoin is going to be accepted and remittance companies are trying to determine exactly how to proceed. It eliminates the cost of transactions and fees. And companies that are in the crypto space, like Stellar, are doing very interesting things. They said, hey, we care about our coin growth. That's all that matters on this side. How do we get this to promote? And they said, we won't charge you per transactions, nothing like that. That's the key side to go through. The last one there is expansion. Now, the expansion piece, I think, is really key. How do you get growth on this part? The more you grow on the top line, the more transactions you get, the easier it's going to be to turn around to partners and say, hey, we want to leverage lower pricing on this part. Or let's do something to get to the next tier together. Let's do a joint marketing piece to go through. All these pieces are key parts. I know I'm tight on time there, and I know that I didn't get to everything that I wanted to cover. This is a very large and broad space. I welcome your questions. Like the question there from Rick. Share this as much as you like. Absolutely. Reach out to me, reach out to Ugo and his team there at More World, which has a wealth of information on this side. Hit me up with questions now. Connect with me on LinkedIn. Reach out with any other additional questions that you have. And I'll pause there to see if there are any Q&As that I can address right now. Otherwise, I thank you guys for the opportunity to share this insight with you. And I say, let's keep our eye on the pulse here. Thank you, guys.
Well, thank you very much to Erick and to all of you for your presence. We hope you have enjoyed this session. The session is being recorded and will be available on the Pinet platform. See you in the next session.